Hello and welcome to BQ Prime. India's GDP figures for the April-June quarter of the ongoing financial year are set to be published on Thursday, that's August the 31st. Domestic economic activity remains resilient. ICRA forecasts GDP growth at 8.5% for that quarter. That's going to be the highest in 4 quarters. Now, to share her insights on what's upcoming, we have with us Aditi Nayar, Chief Economist at ICRA. Aditi, thank you so much for taking time out for us today.
Thank you, Pallavi.
So to begin with, what are your expectations? What do you think will be industries that will drive growth in Q1?
Sure. So we are pegging GDP growth in Q1 of FY24 at 8.5%. So it is a sequential improvement over the percentage, the figure that we saw in Q4 of FY23. And broadly, if we look at the underlying factors, there are 2 or 3 major drivers of this high growth that we're expecting for this quarter. One is that there is a continued recovery momentum that is there in the services sector, which was the worst hit during the pandemic. And last year in Q1 is really when we saw the back to office, back to school, and back to sort of a normalcy coming out of an extended period of lockdowns across the country. And so the service sector was still in a recovery phase at that point. And therefore, we believe that we are going to end up seeing a pretty high growth in some of the components of the services sector, even in Q1 of FY24, because that whole process of coming back to a pre-COVID sort of normal is something that has continued in this quarter. The other very major factor that we see is corporate margins. So last year, after the Ukraine-Russia conflict had started, commodity prices had reached a peak in June, July of 2022. And as compared to that, prices are now significantly lower on a YOY basis in Q1 of FY24. And therefore, we are seeing that in several sectors, there is a lot of easing of margin pressure, which is there. And this is something that we think also would have boosted up the GVA growth, the gross value added growth, particularly of the industrial sector. So that's another factor that we are placing in terms of our projection of 8.5%, which is higher than what the Monetary Policy Committee had put its baseline projection at, which is 8% for Q1 of FY24.
All right. So, like you mentioned, services and corporate profits are likely to lead GDP growth in Q1. I also want to ask you a little bit more about the agri space. So, as per your expectations, agri GVA is expected to come in a little bit lower in Q1 than what we had seen in Q4. Over and above, in August, post Q1 also, we have seen deficiency in rainfalls in most parts of the country. So what's the outlook for Q1 and for the rest of the year in agri?
So for Q1, we're expecting GDP growth, the GVA growth in agriculture at about 4%. This is based on the latest available advanced estimates for the Rabi crop, which was harvested in Q1. So while 4% is high, yes, it's still a step down from what we saw in the previous quarter. And, this was a quarter in which we had a lot of uneven rainfall as well. We have from then on moved into the monsoon, which had a slightly late onset, delayed progress across the country. Then we had very high rainfall in July, which sort of caught up to a normal level by the end of that month. And then again, we've had a lot of deficiency, as you said, in rainfall in the month of August. And at this point in time, we're about 7% below normal for the monsoon season as a whole. And to get to 100% of the long period average, the rainfall would need to be about 20 to 22% higher than normal in the remainder of the monsoon season, which seems a little unlikely. And even if we have an absolutely at par rainfall in the rest of the monsoon season, we're basically going to end up at about 94% of LPA for the full 4-month period, which is just at that lower bound of what is considered to be normal. So most likely, I would imagine that we're going to be in somewhere in the 90 to 100% kind of range for rainfall. I mean, 100% I would think is quite unlikely now. Maybe let's say 90 to 95% kind of range for rainfall for the entire monsoon season. And reservoir levels are trending well below where they were last year at this time, although as compared to the historical level, they're not so bad, they're quite okay. Now, really, at this point, a lot of sowing is behind us. The main thing now is what is going to be the impact of the subpar rainfall on yields. And so this is clearly something which remains a concern going ahead. And we are not terribly hopeful of this at this point that we are going to end up with a very high GVA growth in FY24 for agriculture unless we end up with significant post-monsoon rainfall. So as of now, I would imagine that the GVA growth for the full year is probably going to be 1.5 to 2.5%, and even this will benefit from this 4% growth that we are estimating for Q1.
Sure, all right. State capex was fairly strong in Q1, also a sharp uptick from Q1 last year. So what's the expectation on that aspect? Government, central and state capex, will that also, do you also see that as one of the primary drivers of growth in Q1 or the first half of the fiscal year?
Absolutely. In fact, we've seen a lot of investment related indicators that have done quite well in Q1. And we are hopeful that we're going to end up with a double-digit expansion in the gross fixed capital formation in this quarter. So this again is something that I do think is going to be a big driver of growth in Q1 of FY24. And, a couple of interesting things. Of course, Government of India does seem to be front-loading their capex, and for the state governments as well. This year, at least the approvals as far as the capex loan scheme are concerned have kicked off a lot sooner. That is something that should nudge capex, faster capex from the state governments. Secondly, we've seen that the central tax devolution to the state governments, there was a double tranche in June, and after that, even the July figure was higher than what we had seen in April, May. So there has been a good amount of front loading as far as the tax devolution is concerned as well, which gives a lot of comfort as far as the revenue streams of state governments are concerned. And such factors should help to front load capex. Maybe even in the current quarter, we should expect such trends to continue, which will push up the GDP growth in the first half of FY24. However, we are a little cautious about what that would mean for spending in the later part of the year as we move closer to the parliamentary elections. So typically when the model code of conduct gets put in place, we do see capex activity slowing down. So by front-loading capex, what we're possibly trying to ensure is that the budgetary targets are not missed. But at the same time, it may mean that what we are seeing as higher momentum of spending in H1 may automatically kind of lead us into a slower momentum in H2 as we get closer to the elections. But at the same time, making sure that the budgetary targets are not missed by a wide margin for the states or not missed at all for the center. So that is something to just keep in mind in terms of not necessarily extrapolating a very high GDP growth in Q1 toward the rest of the year.
All right. So, at various parts last fiscal, there were some concerns around demand, specifically rural demand. What's the outlook for this year, specifically in Q1? There seems to be a consensus that rural demand has seen some sort of a pickup. What's your expectation?
So I would say that rural demand is still kind of mixed, and I would expect it to remain cautious going ahead, given how erratic the monsoon has been so far. So I do think that overall we are in for a period of very uneven demand as we have been in the last year or so. So my expectation is that urban India will possibly continue to show a stronger demand than rural India, even though the pace of growth, given the base effect, may be different. And also within that, we expect a continuation of the uneven sectoral demand. So by that, what I mean is we've seen for the last several quarters that demand for services has been much stronger than that for goods. And that is, again, possibly something that will continue over the immediate term.
All right. So, like you've mentioned earlier in our conversation, H1, the first half of the current fiscal, is likely to see higher growth. For the full year, ICRA's estimate is a tad bit lower than what the Monetary Policy Committee's was at its last resolution. We did discuss some of the concern points, namely agricultural GVA and lower government capex in the second half. What else is likely to weigh on growth in the second half?
See, a couple of more things. The lagged impact of monetary tightening as it plays out through the system, and also external demand that will possibly remain weak. So broadly, these would be the points that we expect would keep demand a little bit lower. Or rather, I would say that these are the factors based on which we think that GDP growth for the full year is going to be lower than what the MPC has estimated, and especially because of H2. So for H1, particularly for Q1, our estimate of GDP growth is higher than the MPC's. Q2 is broadly in line, but Q3 and Q4, we do feel that growth could slip below the levels that the MPC has projected.
All right. That's it from my end. Thank you so much for taking time out. We'll keep in touch. GDP figures are set to be published on Thursday. Stay tuned to BQ Prime.